Starting early is often touted as one of the most effective ways to build wealth, not just for ourselves, but for future generations as well. The concept of generational wealth goes beyond accumulating personal financial assets. It is about laying down a foundation that can create opportunities for your descendants. In this speech, I will delve into why starting early is crucial for building generational wealth and how small, consistent efforts today can have a profound impact on tomorrow. We live in a world where the gap between the wealthy and the poor continues to widen. According to various studies, a large percentage of the wealth in many societies is controlled by a small fraction of the population. However, the idea of building generational wealth is not just for the rich. It's a strategy that anyone, regardless of background or income level, can adopt. When you start early, the benefits of time, compounded growth, and strategic planning allow you to accumulate resources, assets, and opportunities that transcend individual lifetimes. One of the main reasons why starting early builds generational wealth is the power of compound interest. Compound interest is often referred to as the eighth wonder of the world because of its ability to turn even small, consistent investments into significant amounts of wealth over time. When you invest early, even modest amounts, you give your money the time it needs to grow exponentially. This is because compound interest doesn't just grow your initial investment, it also grows the interest earned on that investment over decades. This compounding effect can turn a small, simple contribution into a sum large enough to impact generations. For example, if you start investing in a diversified portfolio of stocks or bonds at a young age, even with modest contributions, your investments can grow significantly by the time you reach retirement age. If your children or grandchildren inherit that portfolio, they can continue to build on it, benefiting from the same compounding growth you did. This cycle of compounding can continue across generations, steadily increasing the wealth and opportunities available to future generations. The earlier you begin, the more time your money has to compound, and the greater the impact it can have on future generations. But it's not just about investing in the stock market or bonds. Starting early also means that you have the chance to invest in real estate, businesses or intellectual property that can generate passive income for future generations. Owning property, for instance, can provide rental income or appreciate over time, offering a reliable stream of wealth that can be passed on to heirs. Many families that have achieved generational wealth have done so by investing in property and businesses, creating a legacy that supports not only their immediate family, but future generations as well. Building generational wealth is also about breaking cycles of poverty or limited financial opportunity. For many families, wealth building strategies have been passed down through generations, and starting early allows individuals to jumpstart that process and create new possibilities. By prioritizing saving, investing, and building assets early, we can ensure that our children and grandchildren inherit opportunities rather than financial struggles. A legacy of financial literacy and sound money management can break generational barriers and provide the future with resources that weren't available in previous generations. The earlier you start, the greater the chance you have to make mistakes, learn, and recover. Mistakes are inevitable in any wealth building journey. The key is that when you start early, you have the time to learn from those mistakes and adjust your strategies accordingly. This adaptability is essential when building wealth because the landscape of investments, opportunities, and financial markets changes constantly. Starting early gives you the cushion of time, so when things go wrong, you have the opportunity to recover and move forward. Another important aspect of starting early is the ability to diversify your investments. Diversification is critical to managing risk and ensuring that wealth can withstand market fluctuations. When you begin investing early, you can take advantage of different types of assets, stocks, bonds, real estate, commodities, and more, without having to bet everything on one investment. Diversification reduces the risk of significant losses and allows you to build wealth over time in a way that is both secure and sustainable. Beyond financial assets, starting early also allows you to accumulate something equally valuable: knowledge. The sooner you begin learning about investing, wealth management, and financial strategies, the more informed your decisions will be. Financial literacy is a key component of generational wealth because it allows you to make better choices, avoid costly mistakes, and seize opportunities that others might miss. This knowledge can be passed down to your children, equipping them with the skills they need to continue building wealth long after you're gone. Another reason why starting early is critical for generational wealth is that it allows you to develop a long-term perspective. Most people who start later in life tend to focus on short-term gains or quick fixes. But building generational wealth is about taking a long-term view and planning for the future. This approach not only benefits you as you accumulate wealth over time, but it also gives your descendants the resources to plan for their own futures. When wealth is built with a long-term mindset, it has a greater chance of being sustained for generations. Starting early also creates a culture of saving and investing within a family. It becomes a way of life, not just a financial strategy. The habits and mindset that you develop around money will be passed down to your children and grandchildren. If you are intentional about saving, investing, and growing wealth from an early age, you set an example that will shape the financial habits of your family for years to come. This culture of financial responsibility is a cornerstone of generational wealth. It's not just about having money, but about knowing how to manage it, grow it, and pass it on. In addition to wealth accumulation, starting early also allows you to create a financial safety net for future generations. Having an emergency fund, life insurance, or other safety mechanisms in place ensures that your family can weather unexpected financial storms. These protections prevent wealth from being lost due to unforeseen circumstances and provide stability for your descendants. Without this financial safety net, families can quickly lose the wealth they've accumulated as unexpected events such as medical emergencies, job losses, or other financial crises can deplete resources in no time. There is also a broader social impact when families start building wealth early. Families who are able to accumulate wealth tend to have more access to better education, healthcare, and opportunities. By investing early, families can send their children to better schools, provide them with tutoring, and support them in pursuing higher education. This investment in education helps break cycles of poverty and opens doors for future generations to access opportunities that they may not have had otherwise. By starting early, you not only build financial wealth, but also give your descendants the tools they need to succeed in all areas of life. So why do so many people delay starting this process? There's often a misconception that you need a large amount of money to begin building wealth. The truth is that starting early doesn't require a lot of money, just a willingness to take the first step. Whether you're saving a small percentage of your income or investing in low-cost index funds, every dollar you invest today is a dollar that will grow over time. Additionally, many people put off building wealth because they are intimidated by the process or don't know where to start. But the most important thing is to simply start. Once you begin, you can educate yourself, refine your strategy, and make adjustments as needed. In conclusion, starting early is the key to building generational wealth because it harnesses the power of time, compound interest, and diversification. It allows you to break cycles of financial hardship, develop financial literacy, and create opportunities for future generations. Whether it's through investing, saving, or creating a culture of financial responsibility, the earlier you begin, the more time you give yourself and your descendants to grow wealth. The legacy of financial opportunity that you create today can serve as the foundation for generations to come, providing them with the tools they need to thrive and succeed. Generational wealth is not just about accumulating money, but about creating opportunities, breaking barriers, and leaving a lasting impact on the future. So start early, invest wisely, and watch your wealth grow, not just for you, but for those who will follow you. Starting early is one of the most powerful strategies when it comes to building wealth, and the key reason for this is the magic of compound interest. Compound interest is essentially interest on interest. It's the process where the money you earn on your investment generates additional earnings, which then also earn money, creating a snowball effect. The more time you allow your investments to grow, the greater the impact of this compounding. When you begin investing early, even modest amounts can grow exponentially over time, building substantial wealth. The reason time is so critical is because compound interest thrives on duration. For example, if you start investing at age 25, your money will have 40 years to grow by the time you're ready to retire at 65. Contrast that with starting at 45, when you only have 20 years for your money to compound. The earlier you start, the more years you give your investments to grow, allowing your returns to snowball. This time advantage can make a huge difference in the amount of wealth accumulated, with early investors often ending up with significantly more than those who start later, even if the amounts they initially invested were smaller. Even small, consistent contributions, like putting away a small percentage of your income each month into an investment vehicle, can build massive wealth over time. This is especially powerful when you consider how wealth is passed on. If you invest early and let your money grow, your children or grandchildren could inherit these assets, allowing the compound growth to continue across generations. In this way, starting early doesn't just benefit you, it sets the stage for long-term wealth creation that extends far beyond your own lifetime. Starting early with building wealth not only benefits you in the present, but also has a lasting impact on future generations, especially in terms of financial literacy and habits. The decisions you make today, whether it's how you save, invest, or manage your money, create a framework that your children and grandchildren will observe and inherit. By beginning your wealth building journey early, you establish a foundation of financial responsibility that will guide the next generations. When you prioritize saving and investing, you teach those around you the importance of delayed gratification and long-term planning. Your children and grandchildren will see firsthand the value of budgeting, setting financial goals, and making intentional decisions about money. These are crucial skills that aren't often taught in schools, but are vital for financial success. By demonstrating these habits, you not only secure your own financial future, but also ensure that the next generation has the tools to navigate their own financial journeys successfully. The earlier you start teaching your family about money, the more likely it is they'll develop a strong financial mindset. Instead of relying on trial and error or bad habits, they will have a solid understanding of how to make money work for them. As a result, they'll be more likely to prioritize saving, invest early, and take smart financial risks. This creates a cycle of financial growth that keeps building with each generation. Moreover, your early commitment to financial literacy can foster a sense of opportunity and empowerment in your children and grandchildren. They won't just inherit money or assets, they'll inherit a mindset of wealth building. This approach positions them to continue growing the wealth you've worked hard to accumulate, ensuring that your financial legacy is not just about what you leave behind, but the values and knowledge you pass on. Starting early with wealth building efforts can be a powerful way to break the cycles of poverty and limited financial opportunity that many families face. These cycles often continue across generations because of a lack of financial resources, knowledge, and opportunities. However, by prioritizing financial stability early in life, you create a foundation that offers your children and grandchildren the chance to break free from these patterns and create a different financial reality for themselves. When you start early, you have more time to build assets such as savings, investments, and property that can provide a financial cushion. These assets can serve as a safety net for future generations, preventing them from facing the same struggles you might have had when you were starting out. Rather than living paycheck to paycheck or having to rely on credit, your descendants can inherit resources that give them a financial head start. This allows them to avoid many of the challenges that come with financial instability, such as high debt or lack of access to opportunities. Investing in education is another key way to break the cycle of financial struggle. By securing resources early on for your children's education, whether through saving for college or providing opportunities for skill development, you give them the tools to succeed in their careers. Education is one of the most powerful ways to escape poverty and increase earning potential, and starting early ensures that your children can access better opportunities for upward mobility. Ultimately, starting early gives your descendants the ability to build their own wealth without the financial constraints that can hold many people back. By creating a stable financial legacy, you empower future generations to not only maintain but grow the wealth you've worked hard to accumulate, allowing them to create an even brighter financial future for themselves and their families.